Hey, what's going on? Hey, what's going on? It's Scene from Mastering the Market. Today's webinar, we're going to be covering how to buy low and sell high. This is a common, I'm not going to say misconception, but it's one thing that people kind of irrationally or impulsively jump into the markets with. What they do is they look at the market from a perspective of, well, I know that I want to get a certain price. I know basically I know where I want to get in. I know where I want to get out, right? But do they really know the full dynamic of everything that happens in between that price, right? So buying low and selling high is the reason why I wanted to talk about this, because I'm seeing that a lot of investors, a lot of traders are now starting to get into the game, but they're buying cheap as opposed to buying low, and they're selling expensive as opposed to selling high. So what they're doing is getting confused in the game, because although cheap and low is synonymous and then expensive and high is synonymous, when it comes to the market, they're not the same. You can have a price that is very, very cheap, but it's still high. And you can have a price that is very, very expensive, but it's still low. It just depends on how you have to read the market and understand what is going on. So today, what we will be covering is, of course, how to buy low and sell high. In addition to that, we will show where larger players sit, because you have to move with the larger players when it comes to the market. That's who's controlling the market. So that's who you need to move with. If they're not in a position to be moving a certain way, don't move with them, right? So in addition to buying low and selling high, you have to buy in relation to how the market movers are going to move. The larger players, the hedge funds, the corporations, the major players, those are the key players of the game. When they say that they're going to move the market, you have to move with them in addition to buying low and selling high, right? So this is why it can be, you can have cheap prices that are still high, and you can have expensive prices that are still low, because they have a set level of money that the price doesn't matter to them. For them, it's about moving through a particular margin. So in addition to that, I'm going to show you how to find out where the larger players are sitting at, so you can find the right pocket and the right price to actually buy low and sell high, right? But before we go into that, I'm going to break down everything from beginning to end, so we can see exactly what it means to buy low and sell high. So real quick, I'm going to share my screen, and we're going to take it to the drawing boards first before we actually go to the charts, because I'm going to show it broken down on crypto. I'm going to show it broken down on Forex, and I'm going to show it broken down on the stock market. So you can see that no matter what time frame you're on, no matter what market you're in, you're going to have the same result. You're also going to get the same outcome if you know how to read the market. All right. So real quick, I'm going to share my screen, and we're going to get started. All right, so my screen is being shared, so we'll go ahead and begin. So buying low and selling high versus buying cheap, selling expensive. These are two common misconceptions that a lot of people have. So what they'll do is they'll see a price. Let's say it's at $1.50, right? Relatively, that is a cheap price, right? You know that $1.50 per share is not an expensive price. However, when you do the analysis, if the price came from, let's say 75 cents, right? And then the absolute high of that particular movement was, let's say, $1.65, right? Although this right here is a relatively cheap price, right? It is too far away from the low, and it's too close to the high to want to consider entering. The reason why is you don't want to consider entering that because you don't have much room for profit, right? But because you don't have much room for profit, you have a lot more room for deficit, right? So if you're entering here, you have the opportunity or the possibility that it can touch this price and not go through it because that is a high, and then come all the way back down to the low. So when we're looking at how to read the market, to understand where you buy low and where you sell high, it's a concept that I like to go over that I use in the course. Is called pockets, right? Within pockets, every trading movement happens within a certain pocket. There's a wave in which things are agreed upon. The pockets determine where the larger players are going to sit at, right? The larger players, they move a certain way because the larger players need orders to fill. So always remember that. So when you see a movement happening, like let's say you have a nice little uptrend, right? And ideally, if you were to buy, you want to buy low, sell high, buy low, sell high. Now, as you can see, this is how uptrends are made. You have a higher high, higher low sequence, right? So this is the area that you want to be in, but no market looks like that without you doing what you're looking at, right? What you will see in the market are things like this. Right? So it's a lot of highs, a lot of lows, a lot of activity that goes on. So at what point, if you were to see this in the live charts, how would you know where to buy low and where to sell high at? Because if you're looking at it from this perspective, this right here technically is buying low, right? And this is one of the things that I talk about where people always say buy on the dips. Can't buy on the dips if the sellers have control, because it's going to lead to a hit that's going to keep going down. So you have to be able to read the market and know exactly where it's going, what's happening, so you know where to buy low, where to sell high, and you know exactly all the activity that is going in. Okay, so as I was saying, this right here is technically a lower moment, because what happens is all of this information right here, this way, it has not shown up yet. Right. So if you're reading a live market, this hasn't shown up. So there's no, prediction as to what's going on. So you will be thinking that it could still go up, and it's not going to keep going up, because right there, that's just an imaginary thought process as to which direction is going to go in. Right. So what you have to do is first identify where the larger players are sitting. Right. And so to identify where the larger players are sitting, what you have to do is define a pocket. Right. And so real quick, what a pocket is all of the activity that is supposed to be happening within a particular movement. Right. So if you're looking at a chart, you'll see something like this. You see a small range, you see something break up, and then you start to see it, come down. Right. So what makes the pocket is this area here, here, and here. This whole point right here is what I call the pocket. I just put P for pocket so we don't have to write the whole word out. So the P for pocket is all of the activity that is happening within this movement. This is where the larger players, they decided we want to buy at this price and they want to sell at this price. Okay, so what your objective is to find a way to get in as best as possible, where you're as close to where they started buying from and as far away from where they started selling from, because they're telling you we want to continue upwards, right? So in that moment, you have to figure out what things coincide to where you can actually buy low and sell high, because all of this activity, let's say this is 10 and this is 100, right? So what they're agreeing upon is whatever it is that they're selling, whatever it is that the market is, whatever it is that is running the market right now, right? It started at $10, came up as high as $100, and everything in between is pretty much fair game. So you know that, okay, they agreed upon buying here, they agreed upon selling here. Where can I get in? Do I get in at 90? Do I get in at 60? Do I get in at 50? Do I get in at 40? Not only do I, but will I be able to get in at 90? Will I be able to get in at 60? Will I be able to get in at 40? Will I be able to get in at 30? That is very, very important to understanding how to buy low and how to sell high, because all of these factors play into the reality. So when you have your pocket, the pocket is going to be broken down into 3 pieces. All right, just give me 1 second. I'm going to do a new pocket, clean this up. All right. So do a quick pocket. All right. So within the pocket, you have what's called a start. You have the wall, and then you have the end point, right? So all of these points have are very significant in the market, in looking at how the market is going to move. The wall is the area in which the start actually pushed through and changed the market direction. Okay, so from a range right here, where this range was, you couldn't really tell whether it was buying or selling, who had control. When you see these moments right here, these moments are very critical because where the market goes afterwards would determine who's in control of the market, right? If it's above the wall and it's holding above the wall, then you know you have buying control. If it goes below the wall and it holds, then you have selling control. And when you have selling control, that is when the market movers are saying, we don't want this price anymore. So they're selling it. So anytime you buy on a dip when the sellers have control, you're going to lose. But you're going to gain if you buy on the dip when the buyers have control. Okay. So remember, there's those 3 points. You have the start, you have the end, and then you have the wall. All of those points are very significant. So within that, this is the area when you want to be in to start to figure out where I can buy low for me to sell high, because selling high is also, semantics, sell to the high, right? So you don't know, because all of this is pretty much invisible. Everything to the right of this line is invisible because no market data has shown yet. So you can almost not necessarily guarantee, but you can anticipate highly that it's going to retest this area here. However, before it can retest this area, I need a better price. I need a price that is going to be as close as possible to where they started from and as far away from possible as where they started selling from, in order for me to be able to make profit. Okay, so the art of buying low and selling high is not so much as looking for a cheap price all the time, because now we're going to put this into perspective based off of what we had. So let's say, again, let's bring it back to this price being $1.65, right? $1.65 is cheap. It's very cheap, relatively considering to the stock market, right? But let's say it started from 32 cents, right? So now you can see how much you would be losing. So if the possibility of it coming down to 32 and then going back up to 165, this is the area when you want to see, okay, where will be the best place for me to enter, right? Because where will I be able to buy low? Because the low price, all of this technically is a cheap price, because $1.65 is cheap, 32 cents is cheap, but is it low? Is it low enough to where when I ride this wave, let's say this is going to be, let's say this is 89 cents, this area right here, right? So let's say it's coming down to 89 cents. 89 cents is low compared to $1.65 because that's the high. So you want to be able to get in where you can take the low price up to the high price, right? It's not so much as a matter of taking a cheap price up. It's a matter of taking a lower price to where it was once high, right? Because it can very well do this. It can come up to the 165 here and then completely turn back around and go down to the 32 cents again, and even go through 32 cents, right? So let's say if you decided, because all of this to the right is data that hasn't shown yet. So let's say you bought on this dip, because that's what they teach. They teach you to buy on the dips, and they also teach you to buy low and sell high. So seeing this price here, let's say this is about 93 cents, right? And you know that you want to go up to 165. However, you have other factors that are playing into it that is to get back down. So when it comes up, you're getting here, assuming that, okay, I want it to go to the moon, as they always say. That is the common theme of crypto, Forex stocks, is like, take it to the moon, but it doesn't always go to the moon. And you have to always remember, even if you're going to use the metaphor of taking it to the moon, it can still come back down to earth, depending on how close it already is to the moon, right? So when this goes up, it can come down. And then, like I said, it can even come up here again to where you want it to go through 165. So you're letting it sit, right? And let's say it goes up a little bit, and then it continues back down. Why? Because they have already told you within the pocket We want to sell. The larger player said, we want to sell at $1.65. We don't care what the other people of the market are doing because we control the market. So we don't care if anybody else wants to buy at 165 or thinks that the price can go up to $2, $3, or $4. We have already told you we want to sell here because we bought it from here, right? So you want to make sure that you're in the movement with the larger players and allowing yourself to buy low and sell high according to the setup that the buyers have already told you they wanted, right? The larger players already said, we agree to buy here. We agree to sell here. Now you have to figure out in between that area where the best place is for you to buy low and sell high, right? So it's very, very easy to see things like this on, let me go back to my screen. So it's very, very, very easy to see things like that when you have drawings, and that's one thing that that's one thing that gets people. They see the templates, they see how to actually do it in theory. But now we're going to segue into the charts, and I'm going to show you on Forex, I'm going to show you on crypto, and I'm going to show you on stocks how a pocket is formed, how to actually define a pocket and see exactly what's going on. So you can see where you need to be when you're looking to buy low and sell high. All right. So we're going to I start with stocks because that's what everyone seems to really want to deal with the most. All right. Give me 1 second. All right. Let me share my screen. All right, we're golden. All right, so right here, we're looking at the stock Naked brand, right? NAKD. Again, this is not stock advice. This is not suggestions to get into anything at this particular moment, but this is just to show you the power of everything that we just gone over on the drawing tools. We're going to see it in real time on the charts, right? So here, as we can see, we have a very visible pocket. Pick the right color here. All right, so we have a very visible pocket, right? We have the start, we have the wall in which it came through, and we have the end point, right? So for this particular market, we're on the 1 hour time frame. Only thing this is going to pertain to is the 1 hour time frame. Going up a time frame, down a time frame, it changes everything. So what we're discussing right now is solely on the 1 hour time frame, right? So we have this pocket. This right here is the full activity, right? So we have that the buyers, because we know that it is a buying pocket because it is going up, the buyers have decided that they are going to buy at 49 cents, basically, right? The wall is 52 cents. That has relevance, but that's a little bit deeper, and that's not for the context of where we're going in. Those are deeper aspects of the course. But right now, we're just discussing the pocket. So you have the buyers agreeing that they want the price at 49 cents. They also agree that when it comes to 58 cents, we're going to sell it, right? Anything outside of that, yeah, very well possibly could go. But according to the market and where you're analyzing right now, it's telling you that they're starting here, they're ending here. So everything in between is the action that you want to be in, right? But remember, buy low, sell high. But in selling high, you want to sell to the high. So as it's pulling back, you see that it comes down to 52 cents, 53 cents, right? Comes down a little lower, but you start to see that they're respecting this price, right? So with them respecting this price, if this is the area where that they're respecting, this is the area in which you can buy low, somewhere around here. right? Of course, there's other factors that you want to wait for. You want to get into around this area here because this is what it would be like to buy low, right? So the buying low area would be about 52 cents, 52 or 53 cents. And as it's starting to move, right, they're telling you we are going to sell at this point here. Could it go through the wall? Yes, it could. And it could create a new area. This is how the trend is established: higher highs, higher lows. However, only thing that you have right now, as I said, because there's no data here, everything is actively forming right now. So all that you know that could potentially happen is that it could come up to 58 cents, 58, 59 cents, even as high as, because you have these little things right here called wicks. It can even come up as high as maybe 59 cents. But you know, somewhere in here, you should start anticipating getting out, depending on how strong things are moving. But as of right now, this is the area. Okay. And so this is how investing and trading work. Trading is just short-term investing, and investing is long-term trading. You still have to know where to get in. You still have to know where to get out. You have to follow the process in between to get the right information, right? So you know where to buy low and where to sell high. You know, if you were on a much larger time frame, you would still want to see this setup, but you would just wait a decent amount of time longer for it to go to where you needed to go. Okay, so that was a stock. All right. Remember, same setup. So now we're going to go into a crypto. I had that set for the 15-minute time frame. Okay, so here we have VeChain. This is a cryptocurrency of VET. It is pretty much locked in under 10 cents. Well, it's at 10 cents now, right? But it's fluctuating between 10 and 9 cents, right? So this one has a little bit different. This one has a little bit different setup. I wanted to show you this one because I wanted to incorporate the buy on the dips, right? And to show you what happens when you buy on the wrong dips. All right. So here we still have our pocket forming, right? So remember, with every pocket, you have a start, you have an end, right? So the activity is everything that occurs here, right? The buyers and the sellers have decided, the larger players have decided, this is what we want. Okay. We want to sell from here and we want to buy from here. Right. So here's why I mentioned about buying low and selling high and then buying cheap. This right here, at this entry right here, is at 10 cents. That is a very, very cheap price. 10 cents a share. You pretty much can't beat that when it comes to crypto. However, the high, as you can see from this white line, is 10 cents as well. So it's literally fluctuating at the point where they decided they wanted to sell from. And you're already getting the insight and the information that they may sell again, because when it hit that price, it came down and then it came down again. Right. So this area right here would not be a good entry if you were looking to get into the stock, or for this particular one, the crypto, right? So you would want to, if you were to buy low and sell high, you would want to get to as close as possible to 9 cents. Why? Because they have already shown you that they want to sell it. And so here, because this is the pocket that we're in, I'm going to go back a little bit just to show where there's no data. So this is one of the traps that gets a lot of people right here, right? So because we know the future side of it, we know what has already happened, what pocket has already formed. But if we're looking at it from this perspective, there is no pocket. There's no pocket yet. So anybody who decides, okay, I want to buy on the dips, it comes down, okay, I'm going to buy, right? When they bought that, remember, they just told you that they're starting to sell here. So they bought that and then it sold down again. So it's like, okay, now I'm red at this point because I bought here and then it sold down. Some people say keep buying on the dips. Here's another dip. Comes down. And then it eventually stops. And then you have the moment where it comes up, right? So here, the people that bought on this dip, the people that bought on this dip, especially the people that bought on this dip right here, they are happy now because they're like, it's now going up. But where is it going back up to? Where they already agreed earlier that they around the area where they agreed they were going to sell from. So what happens is within that pocket, you see how it comes right back down? So now these people are in the red again, these people are in the red again, and these people are in the red now. And here is where a lot of the market movement happens, because the buyers have already said, we want to buy here. The larger players said, we want to move here, right? That's how the market moves. This is the price they wanted. So the other larger players, the sellers, they said, we want to sell from here. So these two places met, and then it dropped again. But at this point here, because these guys are red now, these guys are red, and these guys are red. And what they wanted was to go to the moon. They forgot that it has to come back down to earth. So when it came down and they were in the red, they got out because they already lost. And they got out and sold to the people who already agreed, the larger players who agreed that we want to buy that price. And what happens? It holds ground, then it goes up. Where? To the original price where they said, the other larger players said, we're going to sell from here. This entire pocket is where the movement happened, right? So you have to keep this in mind at all times whenever you're looking at whether it's a trade or an investment. It does not matter. I'm using the different time frames to show you that it does not matter. It's going to give you the same result every time because it happens in the pocket. And as you see here, because this is live market, it's reacting here, then it came down. And now you see how this candle is beginning to react and come down a little bit. It's because it is at that point, right? Anything entering here is dangerous, right? And it's very risky because you don't know which way it's going to go, right? But you do know that the larger players have already told you that they're selling from here, and they already told you that they're buying from here. So why would you try to buy up here, right? Even though it's cheap, it is a high price because of the low price in which it came from, all right? So we're going to look at one more, and this time we're going to look at it from a Forex side, and we're going to pretty much drive the point home about understanding the pockets. All right. So this one right here is Aussie yen. So this is Forex. All right. So again, we're going to make the pocket. Right. So now that we have the pocket, we have the start and we have the end. Right. And now we have the area that the activity is going to happen all through here. This is the entire pocket, right? So this area right here is pretty much where you would want to be as far as buying low to sell high, right? So as you can see, because they started from here, this is the price they said they wanted. So you want it to at least come down to as low as 80.77, right? But only wanting to get out as high as 81.330, right? So anything up here is not a good place to buy, but a great place to sell. Anything down here is not a great place to sell, but a great place to buy. And as you can see, when they came up here, anyone who tried to come back up here, it just kept getting knocked down. However, as you're seeing on this side, anyone who tried to sell, they're getting knocked down. So you're actively seeing where they are agreeing to buy and sell. So the pocket tells you basically the best place to be in. So now this is another instance where we look at the difference between cheap and low, right? Because if we're looking at the Aussie yen, this is valued at 80.920, right? So that's quote unquote technically expensive in the grand scheme of how we would look at a stock, how we would look at a crypto, how we would look at a market movement, right? And here we have 81.330. So technically, according to the numbers, these are expensive. However, according to how you have to look at the chart and how you have to understand what's going on, this is low, right? So this is a matter of buying low to sell high. right? So when you're looking at your stocks, when you're looking at your crypto, when you're looking at your Forex, your investments, the number one thing you have to know is where you're going to buy low and where you're going to sell high at, right? And the way in which you do that is by the pocket. The pocket is going to define every single moment, and it's going to determine where you should be. And you should already get your mindset and wrapped around. Once you have your pocket, you should say, okay, I want to get as close to this price to buy and as far away from this price to buy. Or if I'm going to sell, I want to be as close to this price as I can and far away from this price as I can, because anything in between that going against it will be dangerous for me, right? So like I said, if you're trying to sell here, you're selling to people who want to buy this price. And if you're trying to buy up here, you're buying from people who want to sell it. So this right here is the danger area. This right here is the danger area if you're in the wrong direction. All right. So let me get back to the main screen. All right. I know I went kind of fast, but that is the art of buying low and selling high. It starts with you having to understand how a pocket moves. Okay. If you understand the pocket and you develop it, then you can start to get an example of where I need to be as far as my entry, whether that be crypto, whether that be stocks, whether that be Forex. All of the markets are pretty much broken down the same way. If you understand how to read them and you understand the story that they're telling, then you can do your analysis properly to see, okay, where do I need to be? Right now, there's a whole bunch of other things that have to go into that dynamic. As I always say, there's 5 things you have to see. 5 things that you have to see before you make any market entry. You need a pocket, a pullback, a battlefield, an upper hand, and a final push. Right. All we saw for this webinar was the pocket. Okay. So you know exactly, not exactly, but you know roughly about where you want to be in if you want to buy and where you want to be at if you want to sell. Okay. Anything in between that is a danger zone. Right. Because the market can literally go either way, but you have to see how the larger players are moving. The larger players are literally telling you every market, this is where we agree on, right? This is where we're going to buy. This is where we're going to sell. If you get caught in between that, that's on you, right? But if you start to think like the larger players, then you start to learn how the larger players are moving, then you have a better chance of reducing your risk, increasing your rewards, right? So with that said, that is pretty much the gist of how to buy low and sell high. You can learn everything a lot faster. You can learn a little bit more with the Mastering the Market course. The Mastering the Market course, I break down so many different dynamics of it. And although the course is specialized Forex wise, I teach it according to Forex because Forex is the only market that is both offense and defense. When you're looking at stocks, when you're looking at cryptos, you can only buy, right? You can't make profit off of the sell. So because you can't make profit off of the sell, like going down towards the sell side, there's not a need for anybody to be off both sides, right? But when you're in Forex, it's 2 currencies going against each other. So as I had the Aussie versus the yen, right? You have Aussie strong, yen weak, right? So they're both telling you certain things that they want to do, and you have to meet in the middle for that, right? So when you learn how to do the offense as well as the defense, then you can take it to another level, because once you have the defense, you always know where to get out, because you know where somebody else can, where the larger players can take you out or where they can step in. And once you know where the larger players can step in, that's when you can move with them. So you're not in an investment too long. You're not in a trade too long. You're not in the wrong direction. You're able to see how to actively buy low and sell high, and how to stay in the market for however long you need to, or get out before things start going volatile and things start going crazy. Right. So you can check out the Mastering the Market course. Give me 1 second. All right. Yeah. So at the Mastering the Market course, currently have a discount code running. I have 15 seats available. 15. That's it. A lot of my students are starting to finish up their last and their final weeks. So, of course, I'm going to need more students in so we can learn a little bit more about what's going on. So, yeah, go to the website, iamjustine.com/master the market. And you can, let me add that as well. All right, yeah. So you can go to iamjustseeing.com/master the market, and you can enroll in the Master the Market course with discount code 15 seats. As I said, I only have 15 seats left for this next session that I'm in, and it's going to go fast. And if the website is also going to be in the description of this video. And once the seats are full, they're full. There's nothing else that I can do about that. But yeah, I hope this this webinar was very informational. You were able to get all of the insight that you need as far as how to buy low and how to sell high. And I'll keep more webinars coming in the future. This is one that has been, frequently asked, and the question has been on the table for a decent amount of time. So I want to go ahead and do the webinar now so we can break it down. Be sure to drop comments on what type of webinars you want to hear about, what other things you want to learn about, and I'll be sure to include them in the web page, in the playlist file, right? And you can go through all of the other files. So with that being said, the webinar is done. Thank you for tuning in. Thank you for showing up for it. And I will see you in the next webinar that I have. Peace, love, knowledge, and freedom. I'm out.